Well, it finally happened. Shopify released their fourth quarter earnings for 2021, and unsurprisingly, the stock just hit another 52-week low of $660 per share. Over the past 3 months, the stock has been under significant pressure and has literally gone down in a straight line by 60%, erasing nearly all of its COVID gains over the past 2 years. First off, I just want to address the fact that this market has been absolutely brutal for growth stocks ever since 2022 began. Countless stocks are hitting new 52-week lows alongside Shopify, and it seems like it's a normal thing to find 20% drops following quarterly earnings reports of some of the world's largest companies. So I truly think we need to take a step back as long-term investors and realize that this type of market activity is not normal. There's just no doubt about it, investors are fearful right now. But as hard as it is, we need to focus on the long-term prospects of these incredible tech companies like Shopify that have been getting endlessly punished in the current market. So in this video, I'll be going over their Q4 earnings along with my brand new Shopify stock valuation model, which will allow us to see if this stock is cheap or if it's actually a value trap. So as always, if you do enjoy the video, remember to give it a thumbs up because it does really help out my channel, and I did put a ton of effort into this Shopify stock analysis, so I really hope you enjoy. Also guys, if you want to gain full access to my brand new Shopify stock valuation model, you can join my Discord community of investors, where you'll also get access to community group calls, as well as seeing all of my stock trades and so much more. But anyways, with that said, let's get straight into the video. Alright, so to start, let's take a look at Shopify's Q4 earnings report to see why the stock would have sold off so much, and then we'll jump into my stock valuation model to figure out if it's a good buy. The first chart I want to show you here is Shopify's absolute dominance in the e-commerce market, only being behind Amazon again in 2021 when it comes to e-commerce GMV. And I do also want to point out that Shopify's US e-commerce market share grew from 8.6% in 2020 to 10.3% in 2021, which is 170 basis points growth. The only company on this list that grew its market share faster than Shopify was Amazon, from 39% to 41% year over year, or 200 basis points, which is incredible. But even huge companies like Apple, Walmart, Home Depot, and Costco, they all grew their market shares much slower than Shopify and Amazon, which just demonstrates the moats these two companies have built in e-commerce. Anyways, getting into the numbers, Shopify grew its revenues by 41% in the fourth quarter to $1.38 billion US dollars, while their full year 2021 revenue grew 57% to $4.612 billion, which did beat analyst estimates. Then adjusted net income came in at $172.8 million, or $1.36 per share, which was slightly down year over year due to higher operating expenses in research and development, as well as sales and marketing. So it's great to see that Shopify is still a profitable business even after the slowdown from COVID, but net income growth is really not a major focus for the company right now, since they're still in that hyper early growth phase of their business. Therefore, what we should care about most is revenue and its growth rate. So what I want to do here is annualize their Q4 revenue of $1.38 billion, which will serve as a minimum amount for 2022, and that comes to $5.52 billion. This gives Shopify a Q4 annualized price to sales ratio of 14.7, while they have a trailing price to sales ratio of 17.5. Now, typically a price to sales ratio of 10 is high, never mind 15 or higher. But for Shopify, based on their history, this is actually cheap. We can see that in 2019, right before COVID happened, Shopify was trading for a price to sales ratio of 28, while the company grew its revenue at 46% year over year. Well, today, the stock is trading at a 38% discount relative to sales, while they just grew the top line at 41% year over year and should continue growing at least 35% in 2022, according to analysts. And you might be asking why Shopify trades at such elevated valuations relative to other tech stocks. Well, in my opinion, there are two main reasons. One, they have incredibly high revenue growth and a massive opportunity ahead that could one day bring them to a $1 trillion valuation. And two, they have very high margin software revenue. Here we can see Shopify is now bringing in over $100 million per month in high margin recurring revenue, which equates to over $1.2 billion per year, and just grew at 26% year over year. But throughout 2022, Shopify expects merchant solutions revenue to grow at over twice the rate of subscription solutions revenue, which is their high margin recurring revenue. So this slowdown in MRR is arguably one of the reasons why Shopify stock sold off, which means that their margins will compress slightly throughout 2022, but as we can see, the company is still much better off than it was before COVID. Shopify's operating leverage, which is simply the adjusted operating expenses as a percentage of their revenue, is still far below 2019 levels of 53%, while today it's sitting at 41% in the latest quarter. So based on all the fundamentals, there's absolutely no question that Shopify is a much better business than it was back in 2019, having tripled their revenues since 2019 and then also beat on earnings recently and over many of the past quarters. Yet the stock is only up 24% since the high in 2019. So surely it must have been the guidance that ruined the stock price, right? Well, here's what Shopify said. Our financial outlook anticipates revenue growth for the full year 2022 that is lower than the 57% revenue growth achieved in 2021. But still rapid and outpacing the growth of e-commerce. They also said revenue growth in Q1 of 2022 will be the lowest, while revenue growth in Q4 will be the highest, signaling a more normalized economic environment. So essentially, the company gave no actual guidance on revenue since we already knew that it was going to slow down from 2021. Like, there was no way that they were going to hit that 57% again in 2022. So honestly, it just boggles my mind that the stock has sold off so much, as if they gave awful numbers, but they really didn't guide for anything. All right, but now I'll quickly show you my Shopify valuation model, which will help us predict where the stock could be in the next 5 years, because at the end of the day, we are long-term investors and we're looking to make a good long-term investment. So what I've done is I've taken Shopify's 2021 revenue, projected it out into the future, and then applied a price to sales ratio on that at some point in the future to give us a stock price. What I'm assuming is that Shopify will grow their revenues 35% in 2022, 30% in 2023, and then 25% per year over the following 3 years. And to be honest, I believe this is quite conservative since I don't think that revenue growth will slow down that quickly given all of the growth levers Shopify still has to pull. But because their sales growth will be slowing year after year, I'm assuming that their price to sales ratio will drop from 17.5 in 2021 all the way to 12 in 2026, despite already being much cheaper than in 2019. This valuation is in line with other software companies like Microsoft and Adobe, which do have higher margins, but their revenue growth is much slower, only being around 15% per year. Also, I've assumed Shopify continues to dilute shareholders at 3% per year, which is about what they did in the latest quarter. So calculating the numbers for the end of 2026, Shopify would have a market cap of $190 billion and a stock price of $1,285 US, or for my fellow Canadians, 1,606 Canadian dollars. In total, this brings the 5-year return to just above 200%, yielding a compounded annual growth rate of 15.1%. So I'd say given these pretty conservative assumptions, Shopify really isn't looking that expensive on a fundamental basis if they can continue delivering these top-line growth rates for several years to come. And I'd say that's very likely because the company is still expanding into many new markets such as Europe for their point-of-sales hardware in 2021, and more recently China with their deal with JD.com, allowing merchants to begin selling to JD's ecosystem of more than 550 million customers. Shopify will also benefit from increased POS hardware sales as more brick-and-mortar businesses reopen, which should slightly offset their software revenue slowdown. So overall, I'm incredibly bullish on Shopify over the long term, and I think that this is a great buying opportunity for those investors willing to wait. And relative to historical standards, Shopify is trading quite cheaply, which means that they could see a big bounce in the stock price on any positive news. Shopify does and always will deserve a high multiple due to their incredible opportunity to capture on the horizon in a quickly growing industry. But in the short term, Shopify could continue seeing pain as they face difficult comps in the first half of 2022, as well as from continued worries about inflation. So if you do plan on buying Shopify stock, consider dollar cost averaging into it rather than buying lump sum payments, but that's just my opinion and not financial advice. Anyways, if you did enjoy the video, don't forget to drop a like and subscribe if you have not already. Also, let me know in the comments down below if you've purchased Shopify stock already or if you do plan on buying more of the stock, and let me know why. What is your bullish thesis for it? And if you don't plan on buying Shopify stock, I'd also love to hear that. But with that being said, I will see you guys in the next one.